What is up, YouTube? This is the Working Investor. In this video, we're going to talk about two funds. We're going to compare and contrast two high-yield dividend ETF funds that are based on call credit spreads, broad index or indexes. One of them is called SPYT, which is the S&P 500 that's done through Defiance, which has a targeted 20% return in dividends. Total return in dividends. And the other one is called GIAX, which is a Nicholas fund, and they also try to target, they say 15 to 20%, and then also possibly 20%. And they've actually been delivering around 24% recently. And this is actually much more diversified. Let's get into the video. So let's first talk about GIAX. So GIAX, if you go on their website, they have a pretty good PowerPoint presentation. I guess the G, I would imagine, stands for global. That's pretty much what it is. So basically, you're diversified globally. It's one underlying that you buy, and you're super diversified, like in broad indexes. You're like S&P 500, NASDAQ 100, and the Russell 2000, which are US broad indexes. Plus you have global exposure as well. So they talk about, like, you can get growth and you can get, earnings. It's actively managed. They do call credit spreads, and they pay out monthly as well. So here they talk about, here's where they say that they try to target 15 to 20%, and they're using call indexes. And here you see, like, their broad indexes, the SPY, QQQ, VT, WO, and then they have like emerging markets. Yeah, they have, like, Asian markets, Indian markets, much more. And then if you keep going down, you'll see the fund manager. One of the fund managers are Jay Pestricelli, and he is our known guy in the Yield Max funds, and he also helps out in the Defiance funds. And of course, it's called the Nicholas Fund. I guess it's after David Nicholas. And then you got Michael Venuto and Charles Raguas. So these are the ones that are running it. And you can see over here a very important thing. They mentioned that they, even though it's 15 to 20% that they're thinking, but they're saying that they're trying to get at least, a 20% return. So they try to do 0.4% weekly, which comes out around around 20% over the entire year. And then you could see here how they have performed recently. You could see that basically they've already given out two distributions. Let's go to GIAX over here, and they've given out two distributions, 40 cents roughly, GIAX a piece. And you could see that when the fund opened, it started end of July, right, July 30th, at $20.09, and right now it's just down around 18 cents. So pretty much, I did the math, it's pretty much around total return so far, if you're extrapolating on this, is around 18% so far. But again, they only have about two distributions, only a few months of data. And then let's talk about the SPYT, SPYT. So SPYT is basically from the Defiance funds. They have S&P 500 call credit spread fund that they do daily call credit spreads. They have one called QQQT, which is the NASDAQ. I think they're trying to come up with the Russell 2000. But here you can see from the time of inception, they started off at around, $20.05. And, they're at $19.93. I've actually added up all their distributions to date. So they've paid out $2.32. But if you subtract the loss of, let's say, 12 cents, so take away 12 cents of total loss in capital, so 0.12. So now if you take 2.2 and you divide it by 20.05, so far, they've times 100. So they've returned so far, total return of 10.97%, but they've been around for 7 months. So if you divide that by 7, it comes out to be about 1.56% total return per month. If you want to extrapolate on that, multiply that by 12 months, you also get about an 18.81% annualized return. So very, very similar so far, but again, like they're both fairly new. SPYT has been around since around March, and GIAX has been around since the end of July. But so far, they're both kind of on track for about 18%, give or take a half a percent, a fraction of a percent return. Time will tell what would happen. But with GIAX, I actually personally, and I'm not giving you any advice, and none of my videos give any advice, I personally felt silly holding holding SPYT when GIAX it does a similar strategy, and they're way, way more diversified. And they're still run roughly by the same, Jay still has his foot into both funds, I would imagine. So anyways, that's my take. Tell me what you guys think about GIAX. And here you can see the spot distributions and what you would think why you would consider one over the other. Because I was thinking to myself, like, why should I own SPYT and then QQQT, and then if Defiance opens up a NASDAQ daily cover call ETF, do that as well. And then here with the GIAX, you're holding like everything. Like, look over here. Let me show you the holdings over here. If you go up over here to the holdings, look at this. Hold on. Where is it? They have like so many holdings. It's not a joke. Also, their assets under management, they've actually increased. Just about a week or two ago, I was looking into the fund. They had about $18 million in assets under management, and now they have 25.35 million. So it's really, really, it's really growing a lot more at a super fast pace. And here you can see the 240 cents payments, and here you see the holdings. So I mentioned the 3 broad index ETFs they have right now, and it could change. And also, one thing to point out is they also can hold single stock holdings. So you see here in the bottom, Taiwan Semiconductors, United Microelectronics, but you see they have the Freedom 100, Franklin India ETF, so exposure to India, exposure to Argentina, and then they also have a Vanguard Dividend Appreciation ETF. So they also have some, dividend growth ETF as well. So really, they have like a really broad, you're really playing on a really broad thing. And just so you know, like I said, like in their prospectus and in their PowerPoint presentation, they do mention on the top, if you go to the top, they do mention that they could hold pretty much, you see here, ETFs and individual securities. So they have the flexibility to hold broad-based ETFs, and they have globally from all over the world, and they could hold individual securities as well. So you have a lot of different opportunities. A lot of companies, like let's say FEPI, for example, from RecShares, not to get too far in the tangents, but obviously, when it comes to option premium, if you own individual stocks and do run options on them, you tend to have a little bit of a higher premium because it's single stock, risk versus a broad-based index. So some companies like, RecShares, they would sell on, let's say, the NASDAQ, they would sell single stock. They would do single stock in there, and they would get better returns than the broad index. So they have the flexibility to use individual securities. So they're kind of like a hybrid, kind of a bit of like a hybrid model. Anyways, let me know what you guys think about GIAX and what you guys think about SPYT and Defiance funds, and why you think of one over the other as something that's sort of relatively NAV flat so far historically, but has consistently paid out okay return of around 20%. This is the Working Investor over and out. Have a wonderful weekend.